99.999% of the people that own Bitcoin are fucking morons.
Of course I hate the Bitcoin success.
Now, you realize laughing and smiling is a coping mechanism for insecurity, you fucking idiot?
They're highly volatile, see Bitcoin, and therefore not really useful as a store of value.
I don't welcome a currency that's so useful to kidnappers and extortionists and so forth.
Retarded imbeciles.
Nor do I like just shuffling out a few extra
billions and 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 billions
of dollars to somebody who just invented a new financial product out of thin air.
Some of you in this room fall into that category.
It's more a speculative asset that's essentially a substitute for
gold. Self-destruct sequence activated. 3, 2, 1.
Is this your homework, Larry?
Just ask him about the car, man.
Is this yours, Larry? Is this your homework, Larry?
Is that your car out front?
Is this your homework, Larry?
We know it's his fucking homework. Where's the fucking money, you little brat?
Welcome back to the channel, everyone. Johnny here. I hope you all had a wonderful weekend. Let's get right into today's episode. Over the last month or so, the price of Bitcoin has been pushing higher and higher, recovering more than 60% since touching the $28,600 low on the 22nd of June. And after breaking back above the 21 weekly exponential moving average earlier this month, on the surface, it would appear that the bulls are back in full control. Especially when you consider the fact that the entire crypto market cap has retaken the $2 trillion mark, and altcoins like Ethereum and Cardano are getting closer and closer to testing previous all-time highs. However, there's a lot more to the story that requires looking outside of the cryptoverse to get the full picture. Looking at just how overbought and how overextended traditional markets are right now, there's no shortage of data suggesting that we are getting closer and closer to a major market decision point. Not to mention a number of historically reliable indicators that tend to precede major market moves that we went over in the last few videos, so links to those should be popping up on your screen right now. The S&P 500, while continuing to push into new all-time highs, there's no doubt that the bulls are losing steam, evident by multiple bearish divergences we're seeing develop across a lot of time frames. And we're seeing incredibly similar clues in the Dow Jones Industrial as well. Higher highs in price, lower highs on the RSI, an almost identical setup to the previous two sell-offs we've seen. As you can see, we've got another rising wedge, and previously there were anywhere from 2 to 4 bearish divergences, this is the daily chart, that led up to the sell-off, each one increasing in size. Now, if we consider the rule of 3, then we could be looking at this sell-off really coming any day now. Now, to be very clear, it does look like we're about to see a correction in the Bitcoin price. That's not up for debate, but what is up for debate is just how deep of a correction we're likely going to see. But by the way it looks, we're seeing something insanely similar develop to what we saw just prior to the crash back in March of last year. Looking at the Bitcoin daily chart here, there's no doubt that the bulls are running out of steam, evident by this massive rising wedge, which is a pretty reliable bearish reversal pattern. We've got overbought levels on the RSI, MACD, MFI, and volume-weighted MACD, and the confirmation of multiple bearish divergences across multiple time frames. So a key level to watch here would be the 61.8 retracement level from the 64.8 $1,000 all-time high all the way down to the $28,600 low that we saw in June. This is sitting right at $47,800, coincidentally right where the Bitcoin price is right now. So if the bulls are rejected here, then we'll be keeping a close eye on a potential bearish breakout of this rising wedge pattern. So depending on when and if it does break out of this pattern, the measured move is all the way down under $29,000 with a ton of confluence right around the $22,300 price level, with the next major support below that just under $18,000. We do have multiple buy orders near these mentioned prices open and waiting to be filled over on ByBit.
ByBit, a crypto derivatives exchange with high liquidity, no overloads, and downtime.
With all of this in mind, we should still consider a few things. Funding rate is still fairly in the negative, and typically we see the spot price of Bitcoin rise when funding rate is in the negative and fall when it is in the positive. Hash rate has been increasing since taking a severe hit earlier this year with all of the China FUD, but has been decreasing again since just before this rally began. And we saw the hash ribbons indicator print a buy signal on the daily time frame just a few days ago, just as it did in late 2019 prior to the massive sell-off in March of 2020. Now, price right now is above the 21 weekly exponential moving average, which is currently sitting a little more than 14% below the price, just under $40,000. So should we get a bearish breakout of this pattern, then we will look for the bulls to find support at the 21 weekly exponential. Should price fall below that moving average, then it's likely we're seeing some further downside out of the Bitcoin price in the coming days to weeks. That's it. That's all I got for you guys today. Thank you so much for dropping in and sticking with me until the end. Don't forget to like, don't forget to subscribe, and don't forget to join that free Telegram group. The link is in the description below. If you're interested in learning technical analysis, or you just want to join the members only Telegram group, go ahead and head on over to our website, 3candlecollective.com, and submit your information today. We are giving away some special free access passes to our technical analysis basic training course. Again, it's 6 chapters, it's 44 videos. You can get through all of this at your own pace. Each chapter has its own chapter PDF, and there are a ton of useful resources in here, especially for the new trader. Again, that's 3candlecollective.com. Thanks for hanging out with me, guys. I'll see you all in the next video. Peace.